for their earnings call. We're a little bit late to the party, so let's dive in.
Consumer behavior from that event. We monitor that very closely. We experiment with our fees on a regular basis, and we think that's part of just building a healthy business to understand pricing with our customers. So trust is our premium brand that we're selling. Product diversity is what we're selling, the experience, the app platform that Brian mentioned earlier. And we think we have a different...
Coinbase is the premier player in crypto. That's my take. Dead air.
Your next question is from the line of OIP, US Tiger Securities.
Hi, good afternoon. Thanks for taking the question. Just want to dig a little bit deeper to the retail trading fee rate question. So, what is the average, rate for advanced trading and non-advanced trading, respectively? And do you think the same dynamics could, will sustain in 3Q? And then my second question is, despite the recent waves of the Bitcoin spot ETF applications, the USDC market cap has been declining. But on the other hand, you mentioned the growth of Prime indicates institutions are still investing in crypto. Do you think on a net basis, the US institutions are losing interest in crypto? And when can we see a turning point for USDC market cap? Thank you.
I'll answer that one. I do think that crypto might just be a bunch of dorks swapping tokens back and forth. Everything is a little suspect except for Bitcoin and I guess ETH.
Fees. We have multiple products within the retail and on the institutional side. So within retail or consumer, we have simple trading, we have advanced trading, we have Coinbase One, and then underneath that we have fiat to crypto and crypto to crypto. So I can't give you a specific blended average for each of these products. There's also tiered fees on the advanced product. What I can tell you is that our fees are transparent, that they're posted for customers, and so customers know what the fee is before they execute a trade on our platform. So then the blended average fee rate, which we report, is just a mix shift. It is math that results from the trading behavior of our clients on our platform. So I can't give you what we expect in Q3. There's nothing that we do other than focus.
It's pretty surprising that Coinbase is flat on the day. I mean, are they up? What is this? Yeah.
USDC. As Brian shared earlier, we did see a decline in USDC market cap as a result of the banking crisis in Q1. So I think we all know that when Silicon Valley Bank failed, USDC had a depeg that precipitated a decline in USDC market cap. We are working collaboratively with Circle and to try and stabilize USDC and to grow. And we made our own numerous product initiatives in Q2 to try and engage further. I think, Brian, maybe you want to share again what we think really the opportunity for stablecoins broadly is around these layer 2 solutions.
Yeah, sure. I mean, just one or two other quick comments on the USDC market cap. I think, this is public as well. Binance actually moved some of their funds from USDC into another stablecoin. But I think that the data we have in the last 6 or 7 weeks, I believe that the USDC market cap is up net of that. And so that's an important data point. I think there was also a perception that emerged just about US regulatory risk. And there was sort of this perception that USDC had more of a US nexus than Tether or something like that. And to be honest, I'm not sure how well informed that is because, of course, Tether is storing US dollars as well. And any bank, whether it's in the US or not, that's storing US dollars kind of needs to have a corresponding bank relationship. And it's within the nexus or purview of the US government. So I think that I'm not sure how well informed that perception was, but sometimes perception is reality. Yeah, I mean, to Alicia's point, I think that we're very bullish on stablecoins. I think that it's an important use case. It's an important stepping stone to getting people access to better financial services. And then ultimately, I think, by the way, longer term, I think we could see Bitcoin and sort of these more deflationary assets.
I think if governments were going to be scared of anything, they should be scared of stablecoins.
People have such a high expected upside on it that they're not willing to spend it in high enough quantities. So anyway, I'll pause there, but those are our high-level thoughts on the market cap.
What are we at with Coinbase? I think 20-something billion, 22 billion.
Good afternoon, and thank you for taking my question. Could you please give us more
21.29
color on the
billion.
traction on Coinbase International Exchange? I think you have 50 institutions, $5.5 billion in contract volume. So what's the next step, and when do you expect revenue to be more material? Thank you.
Yeah, so it's definitely early days on Coinbase's derivative exchange. We've really just kind of launched it in Q2 with a small handful of clients, as you said, really kind of like a beta launch, API only. So some of the next steps that we'll be working on are integrating it into our retail app. This advanced trading for retail customers.
This is a pretty good point, actually. Look at this.
We'll
we
be
chopped off this whole
launching
candle.
it in our Prime app for institutions.
This is a pretty good level. Look at that.
We'll be expanding it to more geographies as well. And there's various licensing requirements in the major markets around the world to get that working. Our customers have also asked for features around unified margin and additional kind of financing and leverage type features. So those are some of the things on the horizon. You can track the data is public just around the volume of the books that we have there live today on our site, international.coinbase.com. And we'll also be adding more books. That's the other thing I should mention. Today, we just have 4 books live. 2 of them got added just in the last week or so. We'll be adding more books as well. So those are all next things that we need to do. There's a lot of work to do to get that to be where we want it to be, and it's definitely very early days. So we're not really commenting on the revenue piece of it yet.
Our next question is from the line of Dan Dolev with Mizuho.
Hey guys, thanks for taking my question. I really appreciate it. We were talking about you mentioned the share gains, but if I look at our data, at least when you compare it to some of your key competitors in the U.S. like Robinhood, I mean, it seems like you are ceding some share. And my question is do you think that's true? And if yes, is it because the price hikes, you're seeing some pushback from the users, or is there any sense of that? Thank you very much.
Thanks for the question, Dan. So as we said, we experiment heavily with any fee change that we roll out to our users, and we're not seeing any change in behavior based on fee changes that we made in Q1 on our platform. We're really excited to see Robinhood's growth into crypto. We think it broadens the users who are interested in crypto as an asset class. We are heartened to see more and more companies add crypto to their portfolios. One of the ways that we differentiate ourselves is that we're a crypto native company and that we're looking to build more crypto native experiences for our users, such as staking is a big one, but then increasingly the integration to our dApp marketplace and the ability to use applications on chain. So we think that we offer a differentiated product suite and that over time, this will really attract and grow users to our platform.
We could really use a Robinhood level experience on Coinbase.
I'll just add to that. I think it's important we just grow the size of the pie here. Crypto is still in its infancy, right? We genuinely mean this when we say we want crypto to be integrated into every financial service business out there. The fintech apps, neobanks, traditional banks, traditional financial service companies, these ETFs, right? We don't view it as zero sum. We view it as positive sum. And
that's good.
The goal is really to help update the financial system globally. And to do that, we needed this to be integrated in all kinds of products and services out there. And, to Alicia's point earlier, we didn't really see any material change in fees in Q2. So I don't think that's something that would have driven that in this case.
What is
Tamika, we've got time for one more question.
Some data on Coin.
Your final question comes from the line of Ben Budish with Barclays.
Hi, good evening, and thanks for taking the question. I wanted to circle back to the question kind of around simple versus advanced trader. I think, since last December, it seemed like the simple trader has been kind of remarkably consistent, whereas the advanced trader sort of comes and goes with market volatility. I was wondering if you could talk a little bit more about the sort of different customer profiles you see. How do they kind of compare? Is it sort of a demographic or an income or sort of interest level thing? Because I think we would sort of assume that maybe the advanced trader is more engaged, but it seems like the simple trader is there quite consistently. So what are your kind of reads on, the sort of characteristics of these customer types other than the choice they're making with how to trade?
Yeah, it's tough to answer your question because it's a wide variety of different people who are accessing it. I do think that, so when we say pro trader, it could mean a variety of things, right? It could mean sort of like a prosumer or semi-pro. They may actually be, trading through our interface. They're more sensitive on fees. They're more interested in short-term trading, whereas the simple traders may be doing more buy and hold. Setting up a weekly or monthly kind of recurring buy that's dollar cost averaging type stuff, which can be more consistent, right? Now, I think pro trader could also mean, hedge funds and the largest market makers in the world, and pension funds and endowments and sovereign wealth funds, and so it really runs a wide gamut. I think that we have more work to do to serve the pro trader segment of the market with some of those features that I mentioned around more order books, derivatives trading, ways for them to get leverage is a big one, kind of unified margin. And so I think as we kind of mature our product offering around the pro traders, which we still have more work to do, I think hopefully we will see that even in up and down markets, we'll see more activity be more sticky there because, pro traders in theory, I think you're right. They should be able to find opportunities to trade whether the market is, no matter what the market is doing. So I think we need to mature our pro trader offering a bit, and that may emerge over time.
I appreciate it. Thanks for the color.
Cool.
Okay, well, that does it for today. Thank you all for joining us, and we look forward to speaking to you again on our next call.
Good freaking game, as they say. This concludes
today's call.
So, what is going on with Coinbase? I wanted to be in more of the call, but, crazy days of trading these days. And I guess I'll talk for a minute, not so much about all this stuff. You can ask ChatGPT about it. It's a great looking document. Crypto market cap versus 7-day rolling volatility. So here's the major annotations as seen from the folks at Coinbase this year in crypto. And late, was it March? Oh, it says right here. It was March. Banking crisis. That was when we had all of these interest rate related fiascos happen with regional banks. Because we've been living with low interest rates for so long that it kind of got baked into the system. And I think it's pretty baked, if you ask me, into the system. It's here to stay. Wells notice. This was basically, I think a Wells notice comes from FINRA, if I remember. We can ask GPT, but I'm pretty sure it does. And it's a notification, or maybe it's the SEC actually, that you're being sued. It's like it's like being served papers, for people, but for companies. SEC complaints, whatever, bullshit. I think that was Mr. Gensler was making some bullshit up, just like I am right now. And then, so what's the point of this graph? What does it tell us? Well, it tells us that it seems like it should be obvious. There's a relationship between volatility and the crypto market cap. Wow. What it tells us is that volatility is going down while the market cap is going up. That's pretty crazy. So in the banking crisis, vol spikes, so does price, which is interesting because it's crypto, this has got to be Bitcoin mostly, I'd say. But it's traditionally seen as a risk asset. So why would a risk asset spike in a banking crisis? Well, if you think the government's funny money is run out of funny, you might want something harder than gold and easier to transact. That's where Bitcoin comes in. So then we get the Wells notice that doesn't really impact the market cap a ton. We get a little dip and then a pop. It's almost like these dips are like proving strength or something. Like this trajectory, boom, that's crazy. So one of the things I've talked at length about in other places that is, I think, something that people don't quite fully appreciate about Bitcoin is I believe that the floor with Bitcoin is basically always rising. Let me see if I can zoom in on that. Yeah. The floor on Bitcoin is always rising, and that's mostly because they become slippery and lost. It's very hard to hold on to Bitcoin for decades. That's where companies like Coinbase come in. You know, people say, not your keys, not your crypto. Well, if you don't know how to decrypt the fucking DAT file or whatever, you're not going to get the wallet back. And so it's not insanely complicated, but it's more complicated than sending an email. And it's definitely more complicated than a bank. And so if ever there was a place where we need like a really simple, like this, you know, presentation actually is like a great example of that, where we need like a really clear place to operate, it's in crypto land. Anyway, so what else is going on? This is an interesting call out. So we're building a sustainable business, crypto market cap. I think their point probably was like maybe they were able to sustain revenue growth despite like market conditions. Revenue was down, end year over year down. Well, anyway, we'd have to read, and I don't want to do that right now. So cool, good job, Coinbase. Like, keep making coins. No, what is interesting about Coinbase? Well, what's interesting about Coinbase is everything that's interesting about crypto. If you want to make a levered bet, and also, I don't know how levered it is, but if you want to make like an index bet on just crypto, and you don't want to think about companies and you don't want to think about coins, you just want to be like, there's this new fancy freaking money that everyone's talking about. I don't know much about it, but I would like to be involved, at least financially. I'd like to expose myself to the risk of crypto land. So if you ask me, the easiest way to do that is with Coinbase, and honestly, Coinbase and Bitcoin. Own the Coinbase stock, get a little bit of Bitcoin, and that gives you a good amount of exposure. And if my experience stays true over time, a little bit of exposure over the long term really can make quite the difference. And so if I was to see like how people might come to truly adopt crypto, it will be more done as a hedge, where like they're not necessarily getting into crypto land because they're true believers, but the movement is gaining so much momentum that they just want to not be totally left behind. And so they're going to take a small hedge. And when a lot of people take small hedges, you know, like there's not a lot of Bitcoin out there. 21 million, way less. I bet there's like, if you ask me, I bet there's like, I don't know, 15 million something total supply. Like, how many Bitcoin got burned? Millions. That's what I bet. I bet millions got burned. Now, it could be wrong, but it doesn't matter because millions will be burned. Now, over time, we'll build tools and products that make it like easier to retain your Bitcoin securely, but those don't exist yet. At least not like Coinbase is as close as we have to something that is like easy to use. It's not even that easy. And it is secure though. And it's, yeah, like there is, you know, there's just always going to be a trade-off between security and like ease of use. You can have things be low cost, fast, and free, or you can have them be strong and durable and secure. Really hard to have both. And so one of the challenges with crypto and Bitcoin in general is it's just too friggin' weird for people. And they get the idea of it. They don't get what they would do with it. Like, okay, so I speculate and have Bitcoin. Like, why don't I just go buy gold? You should buy both. You should have a little gold, I think, and a little Bitcoin, I think. Everyone should. And so, yeah, like one of the reasons I'm so bullish on the crypto space in general, which I think goes through these periods of like where we all get a little bit of a crisis of faith and we don't really see like, okay, well, what is the point of this thing? Well, the point of it, I think, are many and varied, but the most important parts are transparency and democracy, or like you could just call it decentralization. But even that, like that's such a buzzword. It's not even a buzzword. It's like it's more of a technical word. But like it's just like there is no government with their boot on the neck of the people in the land of Bitcoin. That's what we like about it. That's what matters. And so we want to be able to have that freedom and have that security where we know that we can transact value, real value, as determined by the species, right? We say it's valuable. And we want to be able to transact that value without an intermediary, without a third party, and without a greedy freaking politician getting their grubby fingers in the pie. We just want to pay the gas miners to keep the ledger going. Keep freaking gas miners. We want to pay the miners their dues. And so that's fair. That's good. And of course, we'll build all of these abstraction layers so people don't even think about this stuff. There's all these debates in crypto land. Like I've had people really try to bend my ear about proof of stake and proof of work. How can proof of work really not be infinitely more valuable than proof of stake? Infinitely more valuable. Want to know why? It's irreplicable. Anyone can just like be handed the ownership. That's what happened at the ICO days, probably even today. Like I'm sure it's all just insiders who get like the first, chunk, and then retail as usual holds the bag, as we learned with all these SPACs in 2021. The insiders get paid either way. It's the plebs who are always holding the bag. And, it's been set up that way since like kings and queens. Like that's just how it is. And so, but not in Bitcoin land, not in crypto land. In Bitcoin land, we don't have nobles. We don't have magistrates. We just have the ledger and the miners who are dedicated to maintaining it. And in that maintenance comes the security as we continuously use energy, real energy, to basically guess a really big number. And when we guess it right, we get some Bitcoin, and that's awesome. And we love playing that game. All the miners love playing it. And I should have been mining the whole time. Maybe I'll start, right? Maybe I'll start. So the reason I'm so bullish on crypto land really is around democracy, transparency, and no government required, basically, is what I really like about that. And what I'm really bullish about with Coinbase is that they are the premier player. They're like the most trusted and legit institution, at least so far as I see it, in the space of crypto. And if you look at their history, they have only ever tried to play by the rules and have been continuously denied and shut down in their attempts to just create a set of like operating principles. Like, you tell us how you want us to operate. Well, we don't even want to have the discussion. Okay, fuck you then. We're going to go build crypto in Europe. Like, right? But hopefully it doesn't come to that. I think we can all benefit worldwide and as a country from the principles of blockchain, and whether or not like the current crypto tokens are worth anything in 10 years, who knows? I'm sure that Bitcoin will be, I think, and a few others. But yeah, so that's kind of my thoughts on the last 2 days have been fintech land, and it's really actually is the majority of my focus. I'm really excited about the potential of Coinbase and Robinhood. If I was to say the major advantage that Coinbase has, and God, I hope they just like double down on this, is that they own all the companies in crypto land, at least a slice. Like if you do anything with the money, I hope it's like increase your ownership of everyone in crypto land as much as you can. And yeah, there's counterparty risk or whatever the technical words are that describe having like concentration in that way, but like mitigate it somehow, because it provides what Coinbase is so good at, which is like a really easy, it's not like, it takes something that is complicated and it makes it simple. And I think that's why Coinbase has been so successful, and I think why they will be, continue to be the premier brand in the land of crypto. So that's the thoughts, that's the stream, and thank you for watching the video. I really think that if you got this far, maybe you got some value from it, right? And we're all just hanging out here, but if you want to, encourage me and help me keep doing this stuff, then, I don't know, send me something, make it good. See you guys.